from past experience that even when the indicators tell you you're at the bottom, you might get one more lurch downwards. I mean, we got a huge lurch downwards. You might remember in 2020, just before the bull market began. But it has held firm really well so far. And it's reflected in a really interesting report I read from the Man Group just before Christmas, which showed that a trend-following strategy performed on Bitcoin and Ethereum has outperformed buy and hold. It's been extremely effective. Really, that's what I've been doing for years and years. I buy as each new trend begins, and then once there's all the froth, and you always know when you're at the frothy time because everybody's going crazy about crypto, and that's the time I always start to think about selling.
Hello and welcome back to Cryptollennium. A lot to cover today, from Bitcoin to DCG to Cardano and Ripple. So without further ado, please like and subscribe and let's dig in. Today we see another part of DCG's support beams begin to crumble under the pressure of this bear market contagion combo. All we can do is watch closely and hope that Grayscale remains unaffected. Crypto winter unrivaled as digital currency group forced to shut down HQ. As a refresher, in the last day, Genesis Trading, one of DCG's subsidiaries, announced that it laid off 30% of its employees. This workforce reduction came just months after a similar move was made in August, when the firm let go of 20% of its employees. And on top of that, on January 3rd, Gemini's co-founder Cameron Winklevoss accused DCG's chief Barry Silbert of operating in bad faith and commingling funds like FTX did. Genesis reportedly owed Gemini $900 million at press time, and Winklevoss has alleged that Silbert and DCG were engaging in stall tactics. Knowing this, another one of DCG's subsidiaries, HQ Digital, has ceased its operations due to the ongoing crypto winter. The firm was the wealth management division of the digital currency group. DCG boasted of an impressive portfolio which included companies such as Grayscale Investments and Genesis Global. However, the firm lost a key part of its crypto empire on the 2nd of January, according to a 5th of January report. What is DCG's HQ? Well, it's a wealth management outfit that was launched last year and was initially described as a re-envisioned multifamily office. The above report further stated that the New York-based wealth management firm managed nearly $3.5 billion in assets as of December 2022. In a statement, a spokeswoman for DCG said, "Due to the state of the broader economic environment and prolonged crypto winter presenting significant headwinds to the industry, we made the decision to wind down HQ. We're proud of the work that the team has done and look forward to potentially revisiting the project in the future. We'll keep you updated as the story unfolds." So you might have noticed Bitcoin has steadily been moving up in the last few hours. Before we talk about why that is, let's see what this research firm had to say as a warning for Bitcoin holders in relation to what we've been discussing. Research firm issues warning for Bitcoin and ETH investors over the DCG situation. The firm issuing this warning is renowned crypto firm Arcane Research. And one of their analysts is quoted saying investors should pay attention to the ongoing financial distress related to DCG, as the outcome could severely impact crypto markets. In the reasoning behind the warning, Arcane Research states that if DCG goes bankrupt, it could be forced to liquidate its assets. This could force DCG into selling its sizable positions in GBTC and unknown positions in ETH and other Grayscale trusts. Further, the analyst argues that a natural, less liquidity-constrained solution could be a Reg M solution that allows holders of Grayscale Bitcoin Trust, GBTC, Grayscale Ethereum Trust, and the other trusts to redeem shares at net asset value. The problem with this is a Reg M would cause a massive arbitrage strategy of selling crypto spot versus buying Grayscale Trust shares. If this scenario plays out, crypto markets could face further downside. In the long run, however, Arcane Research calls this scenario a positive event, as the crypto market is finally relieved of a huge burden caused by the Grayscale Widowmaker trade. According to LUNC, this event could be a potential final market bottom event. Now that we know this, let's dive into why we're seeing strength in the crypto market. Why the dollar death cross is bullish for Bitcoin. Today, the dollar currency index saw a death cross on the daily time frame. Bitcoin as an asset trading against USD is especially susceptible to strength or weakness in the greenback. Since Bitcoin was created as an anti-fiat solution, you could see why this would be a bullish signal for Bitcoin. In many ways, its arch enemy should naturally be the almighty dollar. Bitcoin also trades against USD as the primary conversion rate and most dominant trading pair. So when the dollar is strong, Bitcoin tends to be weak and vice versa. Today, the dollar showed the world a potential sign of weakness with a death cross on the DXY dollar currency index. Take a look right here. You can see it perfectly. Pause the video and take a look at how these changes affect the price of Bitcoin. On average, Bitcoin gets a 359% boost, history shows. When comparing 2015 through today, the DXY has death crossed a grand total of 6 times, including today. 3 such crosses took place from 2015 to 2017. 2 more took place in 2020, just ahead of the most recent bull run. I wouldn't say this is the beginning of a bull run, but maybe things are going to start getting interesting. A brief history across 5 signals since the 2015 bear market bottom, Bitcoin price climbed an average of 359%. The 3 weakest signals resulted in between 64% and 120%. Each saw plenty of volatility at the front and the back of each rally. The other 2 death crosses led more to dramatic declines in the DXY and therefore much more upside in Bitcoin. These signals produced 567% in 2020 and a staggering 935% in 2017 during the final bull run that made the top cryptocurrency a household name. Now, I don't know if the gains will be that staggering due to the law of diminishing returns, but you can expect this indicator to be somewhat accurate when it comes to trend reversals or changes. With this said, there are also bearish signals to be identified. Let's take a look at one briefly. Bitcoin bearish signal, large dormant supply on the move. This just shows how many bearish and bullish signals one can find on a daily basis, so take everything with a grain of salt. On-chain data shows a large amount of old Bitcoin supply has moved in the last few days, something that could be bearish for the crypto's price. As the above graph displays, there have been 4 large movements of coins belonging to these cohorts in the last few days. 3 of these transfers were from the 2-year to 3-year age band, while 1 was from the 3-year to 5-year group. Generally, large movements of such old Bitcoin supply is a sign of dumping from long-term holders. And if it's the case here as well, then it would mean that the current market broke these so-called diamond hands into selling. The quant notes that these transfers were at least not headed towards exchanges, which does reduce the probability of these transactions being for selling purposes, but obviously doesn't eliminate the chances as these investors could have been selling through OTC deals. Regardless, however, the analyst cautions it is very surprising to see 4 of these transactions in 1 week. It is definitely worth watching in the next period. Now let's dive into Cardano. You might have heard already, but Cardano gains 12% in a week as whales wake up. Cardano, currently 9th most valuable cryptocurrency in the world, has shown some price activity, once again gaining more than 12% in the previous 7 days despite the general market drop. And a chart for reference. This is most likely linked to the level of Cardano development that has been occurring in 2022, being the highest of any blockchain. And according to this, 2023 is looking bullish, with Cardano looking to support 2 stable coins by the end of Q1 2023. And because Cardano leads gains among top coins, is it set to rally to 50 cents again? Quite an interesting claim, but Cardano is currently trading at about 27 to 28 cents with an increase of over 65% in its trading volume. And it's also gaining more attention in its application for gaming with faster transaction times and regular upgrades. It's ideal for technological innovation. Cardano upgrades also undergo thorough research and scrutiny before being released to the public. ADA's closest resistance level is 32.9 cents. Other resistance levels are 44 cents and about 59.5 cents, as well as 77.7 cents. If the bulls sustain the pressure, it will retest the nearest resistance level of 32.9 cents in the coming days. The support levels of 26, 26.2, and 26.5 cents held and acted as a pivot for the price upsurge. Please note, although this is quite bullish, this is not investment advice of any sort. And before we wrap up, a Ripple update for our XRP holders. Forget Bitcoin and Ethereum, this XRP price candlestick is extremely bullish. So the XRP price has increased alongside an ascending support line since June 14th. The line has been validated numerous times so far. Since September 23rd, the price has also followed a descending resistance line. When combined, with the aforementioned support. This creates an asymmetrical triangle considered a neutral pattern. The line rejected the price on November 5th and initiated the concurrent downward movement. And that's right here. On January 2nd, the XRP price seemed to break down from the support line after 202 days. However, it created a massively long lower wick, this black icon, and reclaimed the line the same day. This is considered a bullish sign since bears did not have enough strength to sustain a breakdown. If this bounce continues, the closest resistance area would be 38.4 cents. In any case, the trend is still considered neutral as long as XRP price breaks out or down from the current symmetrical triangle. Breakdown would mean that the trend is bearish, while a breakout would mean that the trend is obviously bullish. In addition, XRP whales move assets as the price dips a little bit. What's next? Well, according to Whale Alert, there have been several transactions involving XRP. It recorded that crypto whales have transferred about 385 million XRP to crypto exchanges within the last 24 hours. The cumulative tokens are worth almost $131 million in the current market prices. Notably, the largest single transaction from a whale, as recorded by the data provider, involved in a transfer of over 280 million XRP tokens, about $95 million from a single holder. This could indicate a dip. So in contrast to the last article, a recent report also disclosed that Ripple's case with the SEC might still last longer. 7 days ago, Ripple CEO Brad Garlinghouse estimated that the lawsuit might run for 3 to 4 months more, but should end Q1 of 2023, as the lawsuit is highly linked to XRP. Analysts predict a change to the positive direction. And in regards to this court case, notably, if the regulator is successful in it, it might have very negative repercussions for XRP, its investors, and the cryptocurrency sector as a whole. In particular, the regulatory body has the authority to levy a fine on Ripple Labs and demand that the business register XRP as a security, and maybe a lot of your other favorite tokens. Maybe they'll even come after Ethereum as a security. On the other hand, if Ripple is able to defend itself against the arguments presented by the SEC effectively, it may be considered a significant triumph for the firm, as well as a favorable sentiment for XRP. Not to mention the cryptocurrency market as a whole. Despite the fact that Ripple had some success during the hearings, the final result of the lawsuit is still unknown, which is very important to keep in mind. All of this said, be strong, be level-headed, and hold on to your cash until the fog begins to clear. If you made it this far, please like and subscribe, and we'll see you tomorrow.